Okay, good morning, everyone, and welcome to our Tuesday Market Outlook session. My name is Prakash Vijayanath. I'm an analyst here at OptionsPlay, and today I will be walking you through how we are viewing the current market. So over the last week or so, we have seen a slight pullback in equities, which in my opinion has been a positive considering we discussed last week even that the major indices were slightly overbought and a bit of a pullback was needed. So we have seen some interesting sector rotation here as well, and lots of volatility in fixed income and commodities. So quite a lot to get through today, guys. Let's get started here. And before we do, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by OptionsPlay or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. Okay, so our agenda for today, we'll be starting off with the major indices as usual. We'll be highlighting some key levels, going over some technicals to get a better idea of market direction. The major indices right now, they are being a bit more news reliant in the short term. We had inflation numbers last week that did see a bit of a pullback in equities. And we have some retail numbers this morning, I think a few minutes ago. So it'll be interesting to see how the price action has been impacted at the open due to those retail numbers. And in general, it's always good to know, when there are these news events, it's always good to know where the key levels are, should there be a further pullback than what we've had over the last few days. Then from there, we'll be moving on to fixed income and commodities. As I said earlier, we've seen lots of volatility in bonds and yields, and there's some interesting price action that I'm seeing. We'll be taking a look at the sector rotational model. We'll be highlighting which sectors are outperforming and underperforming the market. And overall, we've had some pretty good sector rotation, so that is healthy for a market rally. And we're taking a look at some subsectors of interest, and we'll be ending today's session with some bullish and bearish market observations. My name is Prakash Vijayanath. I'm an analyst here at OptionsPlay, and today I am really excited to share with you some of our thoughts and analysis on the current market. So starting off with the S&P 500, what can I say? The overall outlook here for the major indices is bullish up until the year end. I explained last week that seasonality is strong in November, especially when August to October outperforms the average, and we have that extra tailwind of what has been a very successful earnings season. With 80% of the companies in the S&P 500 that have reported so far, they've outperformed the analyst expectations. So, that's a very strong fundamental driver here for the equity rally. And I will say, though, we have to remember that the major theme in markets right now is interest rates and when exactly the Fed will start hiking. The Fed is being quite data-driven at the moment, and they are keeping their cards close to their chest. That's why we can see that despite the red-hot inflation number that we saw last week, equities did not pull back all that much. And that does tell us that markets are still not convinced here that the Fed will hike rates more than what has already been priced in. So we do have, all in all, generally, I should say, a bullish thesis here for equities approaching year end. And we can see that here in the S&P 500, we saw that strong break above the 453 level. Price did pull back last week. As I said earlier, I think that's a good thing. I think that the major indices did need to pull back. They were just a little bit too overbought. And already we are seeing it rebound. So again, do expect some volatility in the morning because of retail sales. But I do think overall, I wouldn't be surprised if the S&P 500 continued higher from here. That being said, should price pull back a little bit further, the key level, in my opinion, would be that 453 level, which was a previous, which acted as support actually a couple of weeks ago, and that was a previous swing high. So should price pull all the way back here to 453, that might provide a better risk to reward entry for the continuation higher that for equities. Next, we have the NASDAQ 100. Again, pretty similar price action, a bit of a pullback from 400 and all the way to around 390 or so, and already a bounce higher. So I do think, again, more volatility in the open, but should there be a further pullback here in the NASDAQ 100, the 382 level would be key. And you want to see that bullish price action at around 382 for a better risk to reward long entry here for the NASDAQ 100. Next, I wanted to take a look at the RSP Equal Weighted Index. And now this for me paints a positive picture because in the last couple of days, it's actually outperformed the S&P 500. And that indicates broadening participation and broadening leadership away from the heavy weighted names. So that for me, very constructive as a confirmation metric that the rally that we are seeing here in the major indices is a healthy one. And it adds to our thesis that there is more upside here for the major indices leading to the year end. Small caps, so the Russell 2000, we saw that break above 233 finally last week or so. And so far, price has been pulling back, which isn't necessarily a bad thing. Look, last I checked, it did seem that price would be opening lower here for the Russell 2000. And it might decline further here to 233 or so, which in my opinion would be a key level. So you want to see that bullish price action for the continuation higher at 233. And small caps have a lot of catching up to do. Like they have been neutral for so long, for pretty much most of the year when the major indices have, the large cap names have rallied. So I think there's definitely a big bullish case to be made for small caps should they pull back, especially to 233. And I think that'll offer an excellent risk to reward long entry. Looking at bonds. So last time we spoke on Tuesday for the market outlook session last week, price was at around 141. And then that morning, it gapped all the way higher to 151 and rejected it. So that gap higher, I wouldn't say it was unexpected, but the important thing is that it rejected the 151 level. And we saw here over the last few days, a strong bearish move all the way to 146. And I did explain on the rapid fire session that we had on Friday that we have that an open TLT position for a daily play, a bearish one for a daily play. And what I was looking for was that pullback or that reversal back to around 146 or so. And I'll be monitoring the price action there to consider closing it earlier or leaving it open. And right away, we saw that break below that 146 level. Last I did check though, it does seem that TLT will be gapping up a little bit higher, but nothing to be too concerned about. Overall, our thesis for TLT for bonds in general, quite bearish here. I do expect maybe, should this 146 level hold as resistance, a further move lower back to around 142, 141 or so. So we want to keep an eye on TLT, but we will most likely be closing that position for a daily play this week. And that leads us to yields, which has seen a pretty strong turnaround here. We saw that strong rejection from 170 basis points, and it did look like yields were heading down to around 137 basis points or so, but that inflation number just provided the catalyst really for a strong rebound here from 145 all the way to around 160 in a matter of a few days. It doesn't really look like yields are slowing down. I do think there is enough momentum here for yields to reach 170 basis points. And should that level break, look for yields to continue back up to 175 basis points. Now, yields in general are a headwind for equities. You don't want high yields as for the higher beta, high beta names that are unprofitable. They tend to suffer when in a higher yield environment. But I will say, in the bigger picture, yields aren't that high. So I'm not sure. It'll be interesting to see basically when yields start to really have that impact on the overall equity rally here. Next, we have the dollar index, and we've seen some interesting price action here. 94.50 has been broken. We saw it act as resistance for a few weeks. Price did reject it 3 times, and last week it broke above that level with strong momentum. And I do think that the dollar index has more in the tank for it to continue higher, especially when you look at the weekly chart, which I think provides a better view of where the dollar is headed next. We have this almost inverted head and shoulders, really, a bit of a double bottom here, bit of a head and shoulders pattern. And that break above that neckline around 94.50. And momentum here is strong for the dollar, and I do think this breakout opens the door for the dollar to, over the next couple of months, maybe start aiming for around 98, 97, 98 or so. So bullish for the dollar. And what's interesting here is gold has broken out along with the dollar. So this was due to inflation. The inflation numbers last week, for me, that 171 resistance level was, I believe, to be quite a strong resistance level, but inflation was the catalyst for this breakout here. And I do think momentum here for gold is very strong, and a move back to 178 without even pulling back to 171 is on the cards. Should price pull back to 171 or so, I think that provides pretty good risk to reward bullish entry for a move higher for gold. But momentum here is strong, and the upside target here for gold is definitely 178 or so. Oil's price action has been pretty neutral over the last couple of weeks. We saw that massive rally from 62 to 84, and last couple of weeks it's rejected that level 3 times already. So price very neutral, price action very neutral. Our overall outlook is still bullish, with a bit more neutral bias right now. I think its consolidation here is a good thing. I think that it's allowed the moving averages to catch up. It's not as overbought anymore. And ultimately, the supply and demand dynamics have not changed for oil. So, there's no real case for a break below 78. And despite that decrease in momentum, there hasn't been a break below 78 either. So that does paint a positive picture here for oil, for a breakout and a continuation higher. And if you take a look at the weekly charts, you can see, that the last three bearish candles haven't really been reversals. They've more been exhaustion candles. We can see strong bullish move and a bit of an exhaustion here, retracing slightly, but this does look like it's setting up, maybe not right away, but it does look like it's setting up for that catapult higher, break above 84 and a continuation back to 2014 levels or so. Okay, taking a look at some of the sectors. Last week, we had some pretty good participation here last week. We saw 9 sectors having bullish trends, and only communications and utilities on neutral trends. And this week that's actually improved. Now I will say communications and utilities, I will be going over them in a few minutes, but I would take their bullish trends with a pinch of salt. I don't believe they've broken out of their respective technical levels to really say that they're very bullish just yet.
Hey there, thank you so much for watching. I really hope that you enjoyed today's session. If you want to watch the full recording and all of the market mover symbols that I covered today, register for an account at OptionsPlay.com. You will access my daily trading signals to follow along and weekly options education sessions to improve your trading skills, and gain full access to our platform to analyze the risks, rewards, and probabilities for any trade. Regardless of where your ideas originated from, filter them out with OptionsPlay and start gaining confidence in your trades with our platform. And the best part is that you can start completely free with a 30-day trial. Click on the link in the description below to learn more. And as always, have a great trading day.